Hi, good evening. For this session, we're going to talk about capital investment decisions, aka capital budgeting. What do we mean by capital budgeting? Capital budgeting is the process a business undertakes to evaluate potential major projects or investments. The process of capital budgeting involves analyzing a project's cash inflows and outflows to determine whether the expected return meets a set of benchmark. Some points to remember. When we talk about capital budgeting, we talk about the budgeting for those investments or outflows that will have long-term consequences. Yun bang mamumuhunan ka ngayon pero makikinabang ka sa pangmatagalan? You're going to reap the benefits maybe in more than a year's time, 2 years from now, 5 years from now, or even 10 years from now, so on. In capital budgeting, we are going to analyze more of the project's cash inflows and outflows. At least this is what is generally preferred compared to accrual accounting, whether the expected return meets a set benchmark. Mas gusto natin tingnan ang timing ng cash inflow at outflow kesa doon sa accrual accounting. Okay? Magsasample nga muna tayo. Let us answer this one. In the early 1990s, Home Depot launched an environmental program. Since that time, Home Depot has implemented many programs, including designing and constructing its stores to be environmentally conscious. For example, the company paints its roofs white or orange instead of the traditional black roofs that consume more energy. Which of the following would not be a qualitative factor that Home Depot might consider when choosing this course of action? I'll give you 30 seconds to answer this one. Okay, let us answer. So what is the question? The question is which would not be not be a qualitative factor, not a qualitative factor that Home Depot might consider when choosing this course of action. So that is basically the question. Not be a qualitative factor. In other words, if it's not qualitative, it is quantitative. Among the choices, notice that it's only B or boy that can be expressed in numerical form. Pwede natin lagyan ng numero yung letter boy. Hence, the correct answer is boy. Many of the construction decisions result in reduced kilowatt usage on a store-by-store basis. So when we talk about the usage of electricity, kilowatt usage, this can be expressed in numbers. Kilowatt usage can be expressed in numbers. Kaya masasabi natin, quantitative factor ito. As for the remaining choices, A, C, and dog, they are all pertaining to events and consequences that are hardly expressed in numbers. Mahirap siya gawa ng numero. Okay? Environmental protesters bringing attention to environmental policies at Home Depot. Human impact on global warming. objectively speaking, it's hard to quantify that. Increasing interest by millennials in working for companies that are environmentally conscious. AC and dog, mahirap lagyan ng numero. Pero letter boy, numero mismo yan, no? That's a number, reduced kilowatt usage. Hence, this is our answer. This is not qualitative. Boy is a quantitative factor to be considered. Next question. I'll give you a few seconds as well. Go. Okay, so here's the question. Which of the following would be considered a sunk cost when calculating the payback period for an investment in a new machine? If you can remember, a sunk cost is a cost incurred in the past and hence will be irrelevant in any future decisions. So, a sunk cost is a cost incurred in the past, so the correct answer would be letter C. A. The installed cost of the new machine is yet to be incurred if indeed we are going to purchase a new machine. But if we will stay with the old machine, we will not purchase this one. Right? So itong installed cost ng new machine, pwede pa yan magbago. No? Hindi porket naka-past tense to, ibig sabihin dito talagang past. No? Hindi naman siya past tense pala. No? Sinasabi lang niya magkano yung total cost kapag installed na yung new machine. So, the two courses of action are you're going to purchase this new machine to replace the old one or not. So, kung pinili mo na wag nang palitan, hindi may incur itong new machine. But in letter C, the installed cost of the old machine, this was already incurred in the past. So, sabihin na natin 5 years ago binili yung lumang machine. So, pag sinabing installed cost of the old machine, ibig sabihin nun, na-incur na yan. No? Nothing we can do to change it. Therefore, it is a sunk cost, always irrelevant in any future decisions. Remember that decisions can only affect your future. Your past cannot be changed. Anything incurred in the past is already irrelevant in whatever we're going to talk about moving forward. Okay? As I have told you a while ago, capital budgeting involves those expenditures that can influence your performance in 3 years, 5 years, 10 years, or even more. So let's put it into perspective. What basically happens is, magkakaroon ka ng puhunan sa umpisa. Ang tawag dyan, net investment, ha? What basically happens is, you're going to have an outflow at year 0. No? Today is year 0. We call that the net investment. Okay. So what's the net investment? Tagalogin ko, yan lang yung puhunan. The outflow to be spent on year 0. Right now. With the expectation that in the next future years, year 1, year 2, year 3, ... no? Up to year end, there will be cash inflows, no? Dahil meron kang pinuhunan nung year 0, magkakaroon ka ng mga pagpasok ng pera sa mga susunod na taon. We call this the after-tax cash flows. No? We call this the after-tax cash flows. So again, in year 0, we're going to make an outflow. Mamumuhunan tayo sa year 0 ngayon yon. Para sa mga susunod na taon, magkakaroon tayo ng pagpasok ng pera. We will be able to generate cash inflows. So let's do it one at a time. Let's focus on the calculation of the net investment. That is, the spending to happen in year 0. Okay? SkyTap Industries is analyzing a capital investment project using the discounted cash flow analysis. The new equipment will cost to $50,000. Installation and transportation cost, aggregating $25,000, will be capitalized. Existing equipment will be sold immediately after the installation of the new equipment. The existing equipment has a tax basis of 100K, estimated market value of 80K. SkyTap estimates that the new equipment's capacity will generate additional receivables and inventory of 30K. Payables will increase by 15K. Annual incremental pre-tax cash inflows are estimated at $75,000. SkyTap's effective income tax rate is 40%. You are asked for the total after-tax cash flows occurring at year 0. At first glance, this can overwhelm you, no? Lalo na yung topic ay capital budgeting, tapos nakita nyo na napakaraming given. Ang pwede natin gawin dito, syempre kumalma, no? Kumalma muna tayo at himay-himay natin yung problem. Okay? Whenever you calculate the net investment, that's basically the cash outflow in year 0. No? So, cash outflows occurring at year 0, net investment yan. Tagalugin ko, yan yung puhunan natin. We will start with the amount that can be capitalized as part of the machine. We call it the capitalized amount or the capitalized cost of the machine. Whenever you're going to measure the capitalized cost, ito yung amount na pwede mong i-recognize as PPE. No? You're going to include the purchase price or cost of the equipment. Then you will include those items that are necessary in order to put the asset in its intended use. Installation and transportation cost, that will form part of your property, plant, and equipment item. Okay? 25,000, that's capitalizable. So what are generally capitalizable? Well, we would include sales tax, installation, and transportation cost. Ito yung mga bagay na pwede natin isama sa cost ng PPE. Capitalizable amount has a total of 275,000. Puhunan yan, ha? That's an outflow. So I'm going to put here negative. Okay? Puhunan yan, no? Outflow. I'm going to put negative. Now, kapag bumili ka ng machine, sabihin natin pinalitan mo yung luma, malamang nagkaroon ng upgraded version yan, no? In-upgrade natin yung machine, mas malaki yung capacity, no? According to 1, 2, 3, 4, 5, the fifth bullet, SkyTap estimates that the new equipment's capacity will generate additional receivables and inventory of 30K. Payables will increase by 15K. O itong bagong machine mo, no? Itong bagong equipment mo, mas malaki siya. Mas marami kang pwedeng i-process sa bawat oras kesa sa lumang machine. What would happen? Dati kailangan mo lang 30,000 worth of inventory. No? Ngayon kailangan mo na ng 60,000 for example. So from 30, naging 60, nagbibigay lang ako ng example ha. Tumaas yung inventory needs mo ng 30,000. So ulitin ko ha. Dati kailangan mo lang example 30K ng materials para gumana yung machine. Ngayon dahil mas malaki yung machine, para masulit mo yung paglaki ng machine, no? Dinadamihan mo yung inventory. Ginawa mo ng 60,000 worth of inventory. So there is an increase in inventory as well as receivables, if any, of 30,000. Sabi ng supplier natin, yung 15,000 daw, siya na muna bahala. So your payables will increase by 15K. In other words, maliban sa equipment, kailangan natin mamuhunan din sa tinatawag natin net working capital. No? We're going to need to increase our receivables and inventory. Right? Sabihin na natin umakyat ng 30K. Pero sabi ni supplier, kahit wag muna natin bayaran ang 15K. So yung payables umakyat ng 15K. So yung net effect nun ay 15,000 yung dagdag puhunan natin. No? 30K yung mga kailangan nating assets para gumana yung machine. Yung 15K doon, hindi na daw muna natin kailangan bayaran. Kaya umakyat yung payables natin. So 15,000 lang yung dagdag na puhunan. So namuhunan ka sa equipment, mamumuhunan ka rin para sa inventory, which is what we call increase in net working capital, 15,000. Now, this problem involves a replacement of an old equipment. Kapag papalitan mo, pwede mo nang ibenta yung luma. You can offset the sales price or the proceeds of selling the replaced machine. Ibebenta mo yung machine ng 80,000. Look at the market value, 80,000. However, from the point of view of the tax authorities, no, sa Amerika meron tayong tinatawag na IRS, Internal Revenue Services. Dito sa Pilipinas may tinatawag tayong BIR. From the eyes of the tax authority, it has a basis of 100K. If you will have a market value of 80,000, pwede mo lang siya ibenta ng 80K. Tax basis niya ay 100,000. You're going to experience a loss. 80K minus 100K, that's a loss of 20,000. Multiply that by the tax rate of 40%. So nagkaroon ka ng loss, makakatipid ka sa taxes. So times 40%, you have a tax savings of 8,000. So ano nangyari dito? Kung magkano man yung profit mo, mababawasan siya ng 20,000. No? 80 minus 100, may loss na 20,000. That would mean that your taxable profit will be lower. No? By 20,000. 20,000 times 40%, the tax rate, this will give you tax savings of 8K. 80K plus 8K is 88,000. Okay? 80K, nung binenta mo yung machine, yung lumang machine yung lumang equipment. Tapos dahil palugi mong binenta, nabawasan ka ng taxes. No? Nalugi ka ng 20K, 40% nun, 8,000. So all in all, by selling the replaced machine, you're going to have an inflow of 88,000. Then finally, the fourth item to consider is others. No? Other savings or expenses during the point of investment. That is in year 0. Sa problem na to, wala namang savings or expenses. Okay? Hindi counted ito Annual incremental pre-tax cash inflows. Pag sinabi kasing annual, it will start on year 1. No? If you would have annual savings, annual expenditures, the starting point will be year 1. E nasa year 0 pa lang tayo. No? So wag muna natin isipin itong incremental pre-tax cash flows. So again, when you are to calculate the net investment, watch out for these 4 items. The amount capitalized as PPE, increase in net working capital, the sale of the replaced machine together with its tax effect, and number 4, other savings or expenses during the investment point, if any. In this problem, our answer is $202,000. Negative to kasi outflow yung investment. So the answer is letter dog, no? Hindi kailangan sabihin na negative, it is understood. Pero yeah, outflow yan Net investment is an outflow. So net investment, $202,000. Okay? Next, let us go to the following item. This time, you are asked for the after-tax cash flow for the first year of the project. I will give you a few minutes. Okay, so the given in this problem is very much similar, except that this time we are given a depreciation schedule. If you are given a depreciation schedule, all you need to do is to just apply the depreciation rates at the capitalized amount, no? Apply the depreciation rates to rather apply the depreciation rates to the capitalized amount. And then what else is new here? Nothing else, right? Ang tanong lang dito ay after-tax cash flow for the first year of the project. No? After-tax cash flow for the first year of the project. So what we're going to do is to start with the before-tax cash flows. Okay? According to the second to the last bullet, the annual incremental pre-tax cash inflows are estimated at $75,000. So that's it, no? $75,000. So what are we going to do here? We are going to tax this at a rate of 40%. This is the before-tax cash flow, 75K, multiplied by 1 minus the tax rate. That's 1 minus 40%. Okay? At first glance, you might say that, okay, fine, this is the after-tax cash flow. But you have to understand that recognizing depreciation can actually lower your taxes. No? Yung depreciation, wala siyang bearing sa cash flows. No? Depreciation has nothing to do with cash flows. No cash flows for depreciation. But recognizing depreciation in a year would mean that you can lower your taxes. So how much is the depreciation? In the previous problem, we have calculated the capitalized amount to be 250K plus 25K, 275,000, right? So what you're going to do is you will multiply this by the year's depreciation rate. Accordingly, here it is 20%. So 275K times 20%, you would have 55,000, right? Pardon me. Again, the capitalizable amount is 250K plus 25K, as shown a while ago. 275K times 20%, that's the depreciation expense for the year, 55,000. By recognizing depreciation, your taxes can be minimized. So you multiply this depreciation expense by the tax rate at 40%. You call this the depreciation tax shield. Okay? Depreciation expense times the tax rate, 55K times 40%. You call that the depreciation tax shield. This represents the amount of taxes that were saved, brought to us by recognizing depreciation. So the after-tax cash flow will be 75K times 1 minus 0.4, 45,000. 55K times 0.4, 22,000. After-tax cash flows is therefore equal to $67,000. Correct answer is D as in dog. Your after-tax cash flows is $67,000. Again, the answer is D as in dog. Next, we are now going to talk about project evaluation techniques. These are basically the tools and models that we use in order to determine whether a project will be desirable for our business. Among these project evaluation techniques are the accounting rate of return, payback period, net present value, internal rate of return, and profitability index. We will use these techniques in order to arrive at a recommendation to management as to whether to push through with the project or not. Okay? The calculations that we made here in the past two problems involve the net investment account, which is basically the year zero cash outflow, and then the after-tax cash flow in the succeeding years. Okay. How do we assemble this information? We will need the help of project evaluation techniques. We will use what we have calculated in order to recommend a decision to management as to whether to push through with the project or not. The first one being the accounting rate of return. So, this is actually the weakest of all models, no? Ito yung pinaka-weak, no? Pinaka-mahina sa lahat ng models. Siya lang kasi gumagamit ng accrual accounting, no? Lahat sila naka-base sa cash flow. It's only the accounting rate of return that is based on net income, no? The accounting profit. The rest are based on cash flows, which will become apparent later on why cash flows would be more superior, no? Will be superior to the accounting net income. But unfortunately for ARR, siya lang yung gumagamit ng net income or ng accrual accounting. Anyway, accounting rate of return is the percentage of return expected on an investment or asset compared to its initial investment's cost. Actually, it's not all the time that it's based on the initial investment cost. Sometimes it's based on the average investment. Please refer to the formula here, no? Minsan hindi initial yung basis, minsan average. Okay. So this is the formula for the accounting rate of return. So, the accounting rate of return is basically your accounting profit per year divided by the net investment, no? So, siya lang gumagamit ng profit as a basis for evaluation. Moving forward after this one, lahat sila gumagamit na ng cash flow. The word investment here can mean two things. It's either the initial investment, as was defined here in our description, or it can be the average investment. You take the book value at the beginning, no? The net investment's value at the beginning, and then compare it with the end, then divided by 2, no? Add the end, beginning and end, add them together, divided by 2. Anyway, let us answer this problem. I will give you a minute. Okay, as I always mention, whenever the time is not enough for you, don't worry about it. You can just pause this video, no? So, ganun na lang tayo, no? Just pause this video whenever you think that you're running out of time. Okay, if you need more time to solve, no? Anyway, again, the accounting rate of return is basically the percentage, right? The percentage rate of return expected on an investment or asset compared to its investment. Okay? The amount of or the cost of the investment. The cost of the investment can be initial investment as defined here or based on the average investment. Let's answer. Then a corporation is considering replacing a technologically obsolete machine with a new state-of-the-art numerically controlled machine. The new machine would cost for $50,000, 10-year useful life. Unfortunately, the new machine would have no salvage value. The new machine would cost $20,000 per year to operate and maintain, but would save $100,000 per year in labor and other costs. The old machine can be sold now for a scrap of 50K. Simple rate of return on the new machine is closest to. So by the way, another word for accounting rate of return is the simple rate of return. So book rate of return, accounting rate of return, simple rate of return. They mean the same thing. Okay. Our denominator is the net investment. The net investment is cost of the new machine for $50,000. Offset this by the sale of the replaced equipment. No? The replaced equipment or machine, the old machine can be sold for $50,000. So the net investment is only $400,000. Okay? So, what is your initial investment? $400,000. Paano naman kapag tinatanong ay average investment? What if the question is average investment? By the end of year 10, we can assume that the net investment will only be zero. No? By the end of year 10, magiging zero out na yung book value ng net investment na to. So 400,000 beginning, zero yung end, divided by 2, you would have an average investment of, again, 400,000, yun yung beginning, plus ending, we assume it to be 0, divided by 2, you would have $200,000. $200,000 yung average investment. So, 400,000 yung initial investment. Okay. 400,000 yung initial. Yung average investment, 200,000. Okay? So, what will be the effect on profits if we are going to invest in this one? No? Mag-i-invest tayo dito. Ano ang magiging impact sa profit? Well, yung maintenance ng machine, kailangan natin ng 20,000 per year. Pero dahil ginamit natin yung machine, makakatipid tayo ng 100,000 per year sa labor cost, no? Labor and other cost. Makakatipid naman tayo daw ng 100K. So, negative 20, positive 100. And then finally, depreciation expense, straight line daw to, no? 450,000 divided by 10. Yan, 450,000 divided by 10. So, this is 45,000 per year. So, ulitin ko kasi accounting rate of return, accounting profit ang numerator. So, kahit depreciation, kinakaltas, no? Even depreciation would be deducted, no? Since we are after the accounting profit. So, your incremental profit would be $34,000. Okay, so ano yung accounting rate of return natin pagdating sa ganito? Ano yung accounting rate of return? So if you base it on the initial investment, that's 34,000 per year divided by 400,000, you would have 8.75%. If you base your accounting rate of return on the average investment, so magiging ending value nito ay 0. 400,000 plus 0 divided by 2, that's 200,000. So 34K divided by 200,000, that would be 17%. Dito sa problem na to, kahit hindi niya sabihin, yung lumilitaw lang sa choices, yung ARR based on initial investment, which is 8.75%. So the correct answer here is letter A, no? That's how you're going to answer, no? That's how you're going to calculate rather the accounting rate of return, no? Okay. So, yun lang yung problema ng accounting rate of return. Siya lang kasi gumagamit ng incremental profit. Ano bang problema sa profit? Bakit hindi okay gamitin yung profit? Isipin nyo na lang ganito, no? Number one, yung profit kasi madali yan ma-manipulate. Okay? So, kunyari, meron kang machine. I-depreciate mo siya ng 10 years. Pero yung totoo nun, 7 years lang yung life niya. So, ang nangyari ay, nagmumukhang mas mataas yung profit mo dahil mas mababa yung depreciation if you use 10 instead of 7 years in life. No? So, by adjusting the depreciation life of the asset, you can influence the profit. The problem with profit is that it is easily manipulatable just by tweaking your estimates, no? Especially yung depreciation life. This is not true for cash flow. Cash flows are more objective. What do I mean by cash flows are objective? Walang room for judgment and estimates. If cash comes in, that's cash inflow. If cash gets out, that's cash outflow. Whether you believe it or not, kapag pumasok yung pera, cash inflow yon, regardless of your opinion, no? Kung lalabas yung pera, cash outflow yon. Hindi katulad ng accounting profit, nakadepende pa kung paano mo i-depreciate yung machine. Di ang mangyayari dyan, pag straight line, mas mababa sa una compared sa double declining. No? So, yun yung isang reason. No? One reason is that it's easier to manipulate accounting profit just by changing your judgment and estimates compared to cash flow, which is hard to do. Okay? Excuse lang. Okay. What's the second reason? Isipin nyo na lang ganito, no? At the end of the day, you may have earned income. But if that income is in the form of, for example, capital gains, your property's value went up, hindi mo mararamdaman yan unless and until you're going to sell the asset. No? You hold the property which appreciated in value fivefold, no? Nag-times 5 yung kanyang value. Baliwala yan kapag hindi mo ibebenta. So even though you might be earning some unrealized gain due to capital appreciation, tumataas yung value ng asset, hindi mo yun mararamdaman. Hindi mo dama yung kung ano man nangyayari. Maliban na lang kung ibenta mo. It's because that's where the cash flow comes in. So here in capital budgeting, between accrual accounting and cash flow accounting, we would put more importance. No? We would put more importance to the timing of cash flow. It's only the accounting rate of return that uses profit as a measure of performance. Moving forward, gagamit tayo ng cash flow. Next, payback period. Dito, cash flow na yung gagamitin natin. Ha? We're going to use cash flow this time. The payback period is the length of time it takes to recover the cost of an investment or the length of time an investor needs to reach a break-even point. No? Ibig sabihin nun, gaano katagal mo kailangan hintayin para yung project mababawi mo na. In short, yung pinuhunan mo, magiging sayo na ulit. Okay? There are 3 variants of the payback period. What I describe is called the traditional payback period. No? Kung ano man dinescribe ko, the length of time it takes, no, to recover the cost of an investment or the length of time an investor needs to reach a break-even point. No? Kailan mo mababawi yon? Okay? Kailan mo mababawi yon? Okay, we call that the payback period. No? We call that the payback period. That's the traditional definition of the payback period. We have other variants of the payback period, such as the bailout period. Okay? It's the time it takes to recover the investment, except that under the bailout period, we assume that we will sell the project if we can already recover the invested cash flow. Sa traditional payback period kasi yung assumption, tuloy-tuloy lang yung operations. Hindi mo ibebenta yung machine or yung investment mo. Pero dito sa bailout period, ano yung assumption? Kapag pwede mo nang bawiin yung pinuhunan mo, ibebenta mo na. So, i-consider mo yung salvage value ng machine. Okay? Sa bailout period. It assumes that the project is terminated if all invested cash flows are recoverable. Then we have another version. We call this a discounted payback period. It accounts for the time value of money in calculating the payback period. Okay? So, you just use a discount rate, no? And multiply each cash flow by a present value factor to account for the time value of money. Anyway, I'm going to give basic questions on this one first, and then later on, no, we can experiment, no, we can practice on more difficult questions. So I'll give you a few seconds for this one. When evaluating capital budgeting analysis techniques, the payback method emphasizes, okay, itong payback method, as I described, it only measures how long it takes to recover the project. Naturally, the shorter the better. No? Mas gusto mong mabawi mo agad yung puhunan mo sa 1 taon kesa kung mababawi mo pa siya sa 3 taon. No? So, of course, needless to say, the shorter the payback period, the better. Okay? So you have to understand that the payback period only tells you when you will recover the investment. It doesn't tell you whether you will earn. So again, the payback method emphasizes liquidity. It doesn't tell us whether we will earn from the project. Hindi niya sinasabi sa atin kung kikita ba tayo o hindi. Sinasabi niya lang, kailan natin mababawi yung puhunan natin. Yung cash outflow natin, kailan magiging cash inflow. That is the meaning of liquidity. To convert back your assets into cash. Last one, the payback period doesn't tell you whether you'll earn from the project. It doesn't say anything about profitability. What it describes is when you can liquidate the project, turn it back into cash. Okay? Next question. Okay, as described a while ago, the payback period tells you when you will recover back your investment. In other words, It is the amount of time it takes a project to break even. Whatever outflow you had, you're going to turn it into an inflow. That is what the payback period is all about. Okay? Meanwhile, the discounted payback period, it tells you whether you can already recover the cash flows considering the time value of money. Actually, it's letter C. If you're asked for a description of the discounted payback period, pag yung tinatanong ay discounted payback period, C yung magiging sagot natin. No? The amount of time it takes a project to achieve a hurdle rate of return. Yun yung required rate of return. No? Incorporated sa present value. Okay? Sa letter C yung description ng discounted payback period. Letter dog yung description ng payback period, yung plain, no? Yung traditional. Okay, this time we're going to have some calculations. I'll give you 2 minutes. Okay. Willis Inc. has a cost of capital of 15%, is considering the acquisition of a new machine which costs $400,000, useful life of 5 years. Willis projects that earnings and cash flow will increase as follows. Question is, what's the payback period of this investment? Again, as I've told you, it's only the accounting rate of return that's based on net income. The rest of the techniques are based on after-tax cash flow. So what's the question? What's the payback period for this investment? So isa-isahin natin. Mamumuhunan ka raw ng 400,000. That's your outflow at year 0. You'll generate cash flows of 160K in year 1. That's not enough. 140K in year 2. That's not enough. 100K in year 3. That is enough. It will take 3 years to recover this investment. So the correct answer is letter C. No? Your 400,000 investment will be fully recovered, expected to be fully recovered by the end of year 3. You call that your payback period? 3 years. The answer is letter C, 3 years. What about this one? Okay, this problem is easier. Considering that the after-tax cash flows are constant annually, only at 35,000 throughout the life of the project. The question is, what's the payback period for a capital budgeting project? Initial cost is 175K. Expected annual net after-tax cash flow is 35K. E di divide nyo na lang, no? Your cost of 175K, the initial investment, divided by the annual after-tax cash flows, you have 35. It will take 5 years to recover this investment. Correct answer is D as in dog, 5 years. So ganito kasimple kapag constant yung cash flow bawat taon. What about this one? Ging? Smithco is considering the acquisition of scanning equipment to mechanize its procurement process. The equipment will require extensive testing and debugging, as well as user training prior to its operational use. Projected after-tax cash flows are shown below. So there will be 2 years of outflow. No? By the end of year 1, you're still going to experience a negative cash flow as a result of this scanning equipment. So negative 550, negative 500K, that would be a total of negative 1,050,000. So by the end of year 1, that's negative 1,050,000. And then in the next year, year 2, you will recover 450K of it. So ano yung kulang? Negative 1,050,000, positive 450K, negative 600K na lang. Sa year 3, ending ng year 3, positive 350K, 250K na lang yung kulang. Year 4, sakto 250K. So by the end of 4 years, you will be able to recover back the investment. So ilang taon ka maghihintay bago mo mabawi yung pinuhunan mo, no? Umabot ng isang taon, no? Umabot ng 2 years. Pag sinabi kong isang taon, no? Hindi lang siya si year 0. Umabot siya ng 1 more year. Anyway, it will take 4 years, no? You need to wait until year 4 for this to be recovered. So that's your payback period. Okay, as I have mentioned a while ago, a characteristic of the payback method is that it okay, blank. Okay, as I have told you, the payback period is a measure of liquidity only. It doesn't tell us about whether we will earn from the project. So the answer here is C. It neglects the total project profitability. It neglects profitability and focuses exclusively on liquidity. No? Kailan magiging cash yung pinuhunan natin. Hindi natin malalaman kung kikita ba tayo o hindi. Next. Which of the following would be considered an opportunity cost when calculating the payback period for an investment in a new product line? Okay, opportunity cost is the foregone benefit of choosing one alternative over the other. So magkaka-opportunity cost ka kapag may ibang panggagamitan yung resources mo. The answer here is letter dog. An example of an opportunity cost when you calculate the payback period would be lost profits from the old product line being replaced by the new product line. So ang gagawin nyo dyan, yung mga nawalang profit sa kanya, i-minus natin. No? I-minus natin sa cash flows natin. Kasi nawala yun, no? Nawala yun dahil pinili natin itong isang product line. So that's an example of opportunity cost, the foregone benefit of choosing one alternative over the other. So next in line, we have the discounted cash flow techniques. Okay, next in line, we have what we call the discounted cash flow techniques. These are the capital budgeting models that utilizes the time value of money. Kailangan natin malaman yung present value ng cash flow, for example, in NPV and profitability index. We need to calculate the rate of return that is based on the timing of cash flows. We call that the internal rate of return. Okay? So, what are these discounted cash flow or DCF techniques? We have the following: the net present value, the internal rate of return, and the profitability index. So, in our next video, we're going to start with the net present value. So, at this point, I want you to answer this one. Calculating the net present value. Okay, that's all for this part of our session. Okay, the next session, the second one, we're going to discuss these three, the discounted cash flow techniques.